In this video, I'm responding to a question which has been presented to me by so many students who are seeking to understand how to prepare bank reconciliation statement in a situation where they're presented with the bank statements and a cash book. This is similar to more practical problems that accountants encounter on day-to-day basis, because they have prepared a cash book for the business and they have a bank statement for that particular business, and they have now to prepare a bank reconciliation statement. The question reads as follows. The following is a bank statement of Kakamega Retail Traders for the month of October 2020. Now, as you can see here, we have a bank statement with transactions beginning with the opening balance on 1st of October and all the way to 31st of October, where we have the closing balance. Then we have a cash book bank column as follows, beginning with opening balance on 1st of October, then all the way to 31st of October. The following additional information are provided: that the bank reconciliation on 30th September 2020 showed that one deposit was on transit and two checks had not yet been presented to the bank. That is to mean that this one deposit on transit is a deposit which has not been credited at the beginning of the period and will be credited during this particular period. The two checks which have not been presented at the beginning of the period may be presented during the period also. The next information is that a deposit of 62,500 and 36,000 had been entered in the cash book as 26,500 and 36,000, and in the bank statement as 62,000 and 63,000 respectively. A check from Mkulima for 15,700 was deposited on 18th October 2020, but was dishonored, and advice was received on 4th November 2020. This is a dishonored check, and the information about dishonoring the check has been received after the period of the bank reconciliation. Counterfoils for check number 76 and 88 show that they had been written for 5,800 and for 35,500 respectively. Required: prepare a correct cash book balance and a bank reconciliation statement on 31st October 2020. Now, to answer this question, let us remind ourselves first about the steps that we need to follow to prepare a bank reconciliation statement. The steps for preparing a bank reconciliation statement, as we have learned before, include the following. First, the first step in preparing a bank reconciliation statement: update the cash book with the items appearing in the bank statement and not appearing in the cash book, except for bank errors, which appears in the bank statement. Now, we have learned about the items that are appearing in the cash book and not in the bank statement, and the items appearing in the bank statement and not in the cash book. Whereas some items appear in the bank statement, it means the bank has recorded them, but the business has not recorded them in the cash book. Therefore, they need to be recorded in the cash book appropriately, and also adjustments should be made for errors which have been made in the cash book. Secondly, compare the debit side of the cash book with the credit side of the bank statement to determine uncredited deposits by the bank. Number three, compare the credit side of the cash book with the debit side of the bank statement to determine unpresented checks. And these are checks which have been issued by the business. And by issuing a check by the business credits the cash book to mean that such an amount has been withdrawn from the bank. But in a case that the creditor has not presented the check for payment, then such check is called unpresented check. And that is to mean that the amount has not yet been withdrawn from the bank. And that is the unpresented checks. Lastly, prepare the bank reconciliation statement, which shows unpresented checks, uncredited deposits, errors on the bank statement, and the updated cash book balance. Now, this is what we will prepare in the case of this question. And those are the steps that we are required to follow. Right, so let us start with the second step and the third step. That is because we first need to identify the items which are appearing in the bank statement, but not in the cash book. So for us to really do that, then we're going to compare the debit side of the cash book with the credit side of the bank statement, then the credit side of the cash book with the debit side of the bank statement, as follows. Right, so as you can see, this is the debit side of the bank statement, which should be compared with the credit side of the cash book. So we're going to compare by looking at item by item. Maybe where checks are involved, we are looking at check numbers. And where checks are not involved, we may be comparing the amount which are involved. If you look at the bank statement here, the items which are appearing on the debit side are checks. And you can see check number 63, check number 67, and so on. If you look at the credit side of the cash book, what appears there are checks. And these are checks which have been issued by the organization. So we want to compare them. Let us begin with check number 63. Check number 63 do not appear in the cash book, but it appears in the bank. Therefore, it is unpresented check which was there at the beginning of the period, and it has cleared during that period. Therefore, we need to take that as unpresented because it only appears in the bank statement, but not in the cash book, meaning it was not there in the cash book during the period of bank reconciliation. So this check was unpresented check at the beginning. So we're going to call it unpresented check brought down. Unpresented check brought down. Then we are going to look at the next check, which is number 67. And as you can see there, check number 67 is in both the bank statement and also in the bank statement and also in the cash book, as you can see here. The next one is check number 65, which is also here and also in the cash book. Check number 69, as you can see here, is also available here and also available in the cash book. Check number 68 is available here and also available in the cash book. Check number 64 is available in the cash book, in the bank statement, but not in the cash book. So this is another unpresented check at the beginning. It is available here, but not available in the cash book. Unpresented brought down. Meaning at the beginning of the period, this check was unpresented check. Let us go to check number 70, and you can see here we have check number 70, also available here, number 70. Check number 71 is also available in both cases, as you can see, check number 71. That is followed by check number 66, which is available here. Check number 66 is also available here. The next is check number 72, which is available here. Check number 72 is also available here. That is followed by check number 73, which is available here. Check number 73 is also available here. Check number 74 is available in both cases, as you can see. Check number 75 is available in both cases, as you can see here. Check number 76 is also available in both cases, as you can see. But if you look at this check number 76, the amounts are different. In the bank statement, the check is 8,500. But then in the cash book, the check amount is 5,800. Now let us check the correct amount for this check. In the additional information number, that is additional information number 4 here, it says that counterfoils for check number 76 and 88 show that they had been drawn for 5,800 and 35,500. So it means this check number 76, the amount should be 5,800. And that means this amount here is an error. This is an error. The amount in the cash book is correct, but the amount in the bank statement is an error. Right. The next one is check number 79, and check number 79 is available in both cases, as you can see. Check number 77 is also available in both cases. Check number 78 is also available in both cases. Check number 81. Check number 81 is available in both cases. This is followed by check number 82 is also available in both cases. Let us check check number 84 is also available in both cases. Check number 88. Check number 88 is available in both cases. However, if you look at the amount for check number 88, this check number 88 has different figures in the bank statement as compared to the cash book. And additional information number 4 that we read before is telling us that counterfoils for check number 76 and 88 show that the check was supposed to be for 35,500. That is to mean that there is an error here, because this is 53,500 instead of 35,500. This amount is correct. That amount is correct. It does not have a problem. The problem is in the cash book where there was an error, which will be corrected. Next is check number 85. And if you look at check number 85, it is available in both cases. You can find it here. And check number 85 is also available there. Check number 87 is available in both cases also, as you can see. Check number 87 is the last one in the bank statement. So that is to mean that in the bank statement, we don't have checks number 80, but we have it in the cash book. We don't have check number 83. We don't have check number 86 here. We don't have check number 89. We don't have check number 90, check number 91. All these checks are not there in the bank statement. That is to mean these checks have been issued by the business, but not yet presented in the bank for payment. There is an item that we have witnessed here in the bank statement. This item is known as standing order insurance. Standing order is appearing in the bank statement, but not in the cash book. So it is an item which should be in the cash book, but missing. So when we are updating the cash book, we shall record it. There is another item known as service charge. So this is also appearing in the bank statement, but not appearing in the cash book. So those are the items which are not in the cash book. They are in the bank statement, not in the cash book. The others which are not in the cash book, but in the bank statement are unpresented check brought down, unpresented check brought down, as you can see them there. So that is a comparison of the debit side of the bank statement with the credit side of the cash book. We can then look at a comparison of the credit side of the bank statement with the debit side of the cash book as follows. Right, there's a deposit in on 4th. The deposit is 82,000, and this deposit you cannot really find it in the. It's a deposit that you cannot find in the debit side of the bank of the cash book. Now that is to mean that this deposit was on transit at the beginning of the period. And if you look at the additional information 1, this is a deposit that you've been told about, that a bank reconciliation on 30th September 2022 showed that 1 deposit was on transit. So this is a deposit that has cleared, but you cannot find it in the cash book. That means it was on transit. Right, so we have a deposit on transit, as you can see here, the deposit on transit. There is a deposit that was on transit. This one here. The next deposit here is 7,280. We are comparing the amount with the other amount. So that deposit is available in both cases. There's a deposit of 36,100 is also available in both cases. There is a deposit of 28,000 is also available in both cases. There is a deposit of 51,000 which is available in both cases. There is a deposit of 20,560 available in both cases. There's a deposit of 014 and that is available in both cases. There's a deposit of 34,500 is available in both cases. There's a deposit of 42,750 is available in both cases. Then there is a deposit of 9,000 here is available in both cases. There is a deposit of 6,300 and there's a deposit here of 36,000. Right, so that deposit seems not to marry or to match, but we're told about that deposit. We're told in the additional information number, that is additional information number 2, that deposits of 62,500 and 36,000 had been entered in the cash book as these. And this respectively. So in the cash book, the 36,000 was entered correctly as it is, but 62,500 was not entered correctly because it was entered at 26,500. So the deposit we will find in the cash book is 26,500, which in the cash book you can see here. So that is the deposit was recorded in error. It is correctly recorded in the bank statement because in the bank statement, It's recorded as 62,500. So that is very correct. But then not recorded correctly was 36,000, which was recorded as 63,000. So if you look at the bank statement, there's a 63,000 here. This was the error. It was supposed to be 36,000. And then there's a deposit of 8,050. There's a deposit of 62,500. This is correct. There's a deposit of 13,025, and that is also correct, as you can see here. That deposit is okay. This deposit is also correct. So there are some deposits which cannot be compared across. And the deposit that cannot be compared across are called uncredited deposits. Uncredited deposits carried down. Those are uncredited deposits carried down. But there was also uncredited deposit brought down, which is here. This is uncredited brought down. That is uncredited deposit brought down. Uncredited deposit brought down. Right. So having compared then if you look at this, still you find an amount of 15,700. And that amount has been explained in additional information number 3, where we told that a check from Mkulima of 15,700 was dishonored and the response was received late in November. That means that such a check only appears in the cash book, but not in the bank statement. Such a check appears only in the cash book and not in the bank statement. Also, in the bank statement, there's an amount here, which we are told is dividends. And dividends are received directly into the bank and not through the cash book. That therefore means that they have not been recorded in the cash book, but have already been recorded in the bank. Now, to make adjustments in the cash book, then we must record such amount in the bank, in the cash book. Update the cash book with the amount appropriately. Now, we can now go ahead, having analyzed this, and prepare the adjusted cash book for the business. Prepare adjusted cash book for this business as follows. Now, let us now prepare adjusted cash book of the business as follows. In preparing the adjusted cash book of the business, what we need to do is to adjust the cash book with the items which are not appearing in the cash book, but appearing in the bank statement by recording them to also appear in the cash book. We're also going to correct errors which have been committed in the cash book so that the cash book is correct. Now, this is adjusted cash book. it begins with the closing balance of the unadjusted cash book. We begin with the closing balance of the cash book, which is not adjusted, which is equal to 502, 481. 502, 481. Now, this amount of 502, 481 is appearing on the credit side, and that means that the debit side is greater. Therefore, it is known as a debit balance and should be recorded on the debit side as balance brought down to be 502, 481. Then adjust it with the following items. If you look at the cash book, then there's some errors which were committed as follows. The first one, instead of recording a deposit here as 62,500, the deposit was recorded as 26,500. Therefore, we need to get a difference between the correct amount and the wrong amount. The correct amount is 65,200 minus the wrong amount, which is 26,500. The correct amount is 60. The correct amount is 62,500, and the wrong amount is 26,500. The difference between these two amounts is 36,000. Being an understatement on the debit side of the cash book, these are debit side of the cash book, which was understated. So we need to increase that side by the amount of 36,000. So we're going to say understatement or understatement. So understatement in the cash book on the debit side is 36,000. The next is another error which was committed in the cash book, and that error was committed as follows. A check of 35,500 was recorded in the cash book as 53,500. Now, that check was supposed to be 35,500, but recorded at 53,500. That is to mean it was overstated by an amount of 53,500 minus 35,500. That is equal to 18,000. Being an overstatement on the credit side. If the credit side is overstated, then we cancel the error by recording the same amount on the opposite side. So on the debit side, we need to record overstatement, and the overstatement, which was another error, is 18,000. The next item we need to record is dividends. We are told that the bank receives some dividends on behalf of the business, and this has not been recorded in the cash book. So enter that dividend in the cash book as a cash receipt, because this side is receipts and this side is payments. So we record that dividend on the side of receipts as 8,750. That is about the debit side of the cash book. On the credit side of the cash book, we also have a number of items. The first item, which we find on the credit side of the cash book, which should be adjusted, is an amount of standing order this amount here was supposed to be recorded on the credit side of the bank statement, but was not recorded. So we have standing order of 10,400. Another amount that was supposed to be recorded but not yet recorded is service charge. The service charge is 750. That is this amount. Another amount that should be found on the credit side of the bank statement is an amount that we have been told in the additional information, number 3, that is the dishonored check of 15,700. When this check was dishonored, it was not recorded on the credit side. Usually, when a check is issued, when a check is received from a customer, it is recorded on the receipt side. But then if it has not been paid by the bank, we cancel it by recording the same on the opposite side, which is credit side. That did not take place. So we need to record it, therefore, to cancel it because it has been dishonored by the bank. So we need to record here dishonored check. This is not a check which was issued by the business, but received by the business from a customer. So now we record the amount here as 15,700. As 15,700. That is the amount of the dishonored check. Now, with this, we are now required to balance off the cash book and get a new balance carried down. And if we balance off the cash book, we are going to get the highest total on the debit side. And that highest total is 565 to 31. 565 to 31. That now means that we have a balance carried down, which is on the credit side because the debit side is greater. The amount is 538, 381. 538, 381 is now the balance carried down. Now, this is the balance as per the adjusted cash book, and that balance will be transferred to the bank reconciliation statement. That is the balance as per the adjusted cash book, which will be required in the bank reconciliation statement. So we have prepared the adjusted cash book, and having prepared that, then we can now go ahead and prepare also the bank reconciliation statement, which will take the following items or will be prepared as follows. Right, in the bank reconciliation statement, I will begin with the balance as per adjusted cash book. That balance is an amount of 538, 381. Then to that balance, I need to add. I add unpresented checks. Carried down. These are unpresented checks at the end of the period. At the end of the bank reconciliation period, such unpresented checks is what I'm talking about. That is the balance at the end of the period. Right. This balance at the end of the period this is a balance at the end of the period. And we have identified a number of checks. These are checks which at the end of the period have not been presented for payment. And we have check number 80, check number 83, check number 86, check number 89, check number 90, and check number 91. Those are the checks. So we start with the number check number 80, check number 83, check number 86, check number 89, check number 90, check number 91. So check number 80, if you can see here, a check which was written but not presented yet is 3860. The amount is 3860. Followed by check number 83, which is 15,000. Followed by check number 86, which is 10,520. Followed by check number 89, which is 2,500. Followed by check number 90, which is 64, 529. Followed by check number 91, which is 15, 500. Now, all these checks, as you can see, if we add them and then add them to the balance at the beginning, we're going to get total of we're going to get a total of 111,909, which then we add to the balance as per adjusted cash book. Then we also need to add uncredited deposit brought down. There was some uncredited deposit at the beginning of the period, which was 82,000, and we need to also add that uncredited deposit. At the beginning of the period, if we have uncredited deposit, we add. But the opposite is true, because if we have uncredited deposits at the end of the period, then we have to subtract them. The amount I'm talking about here, which was uncredited at the beginning of the period, is this amount here. What many times we know, especially when we talk about a bank reconciliation statement, we know that unpresented checks we are supposed to add, and uncredited deposits we are subtracting. But then this is explained further, especially where we have opening balances of these items and their closing balances. In this case, we have opening balance of uncredited check of 82,000. And if we have it at the end of the period, then we are supposed to subtract it, as we will see with the other items. Right, if we add all these, we are supposed to get a total of again, we need to add bank errors, but we add bank errors which are increasing the bank balance. bank errors increasing the bank balance. So if we have some bank errors which are increasing the bank balance, then we need to add them. This is in a case whereby, let's say, an item was overstated in the bank and overstated especially on the credit side. Items overstated on the credit side of the bank are increasing the bank balance. So we need to add such items when we are doing bank reconciliation. We have 63,000, and this amount was an error because it was supposed to be an amount of 36,000, which was the correct amount. The correct amount was 36,000, but was recorded as 63,000. So there was an error, and the error is the difference between 63,000 and 36,000. That error is 27,000. So we need to then add here 27,000, which was the error. If we add all these from up there, we're supposed to get a total of 759,290. 759,290. Then we subtract the first item we subtract is uncredited deposits. Uncredited deposits carried down, that is at the end of the period, not brought down. Uncredited deposits carried down. And in this case, we have a number of them. Uncredited deposits, which include, if you check at the end of the period, the uncredited deposits that we found are deposits, as you can see here, they are so there are uncredited deposits, which are 2, as you can see. And the other deposit here we had found, this deposit here is found here. So we have only 2 uncredited deposits. And these uncredited deposits include 171,010 and 31,525. So we have 171,010 and 31,525. If we add these 2 deposits, we are getting a total of 202,535. That is a subtraction or a negative. This is followed by also a subtraction of unpresented checks. Brought down, meaning unpresented checks at the beginning of the period. And we had noticed that there are some checks at the beginning of the period which were unpresented, and therefore we need to subtract them. We do the opposite of what we did with unpresented checks. You can see here, where we have unpresented deposits or uncredited deposits, where we have uncredited deposits at the beginning, we add, but uncredited deposits at the end, we subtract. Now we have unpresented checks at the end, at the beginning. We do the opposite of what we did with the unpresented checks at the end. So here we have unpresented checks at the beginning, and they include the following. We identified them in the bank statement as 31,000 and 51,000. That is check number 63 and check number 64. So we have check number 63, check number 64. Check number 63 is 51,000. Check number 63 is 31,000. Check number 64 is 51,000. So we add the two, and if we add the two, we're going to have a total of 82,000. This is also a negative, or we subtract that. Lastly, we have another amount which is deducted, is known as bank errors. Bank errors, decreasing bank balance. Now, bank errors, decreasing bank balance, we look at them on the debit side of the bank. If there's any error which was over debit in the bank, over debit in the bank is this amount. We are told that check number 76 was supposed to be a check of 5,800. As you can see there, a check of 5,800, but this check was recorded as 8,500. So it was an overstatement of a drawing, or it was an understatement of the bank statement of the bank balance by a total of 8,500 minus 5,800. This is equal to 2,700. So we shall have here 2,700, which we subtract. Now, if we look at all these, then we're going to subtract the three items from 759 to 90. That is going to give us a total of 472,055. Now, this amount is the balance as per the bank statement. So let us check. What do we have in the bank statement at the end? In the bank statement at the end, the amount we have is an amount of 472,055, and that is the same as the amount we have here in the bank reconciliation statement. So if this amount is the same as what we have in the bank statement, then it means we have successfully done a bank reconciliation statement.